Hello, so now we'll discuss consolidation subsequent to acquisition date. So for the overview, we'll discuss the consolidation entries, how to compute for the consolidated net income, and then how to present the consolidated shareholders equity, because this is what's unique with the consolidated financial statements. You have two owners of your shareholders equity, namely the equity attributable to parent and then the equity attributable to the non-controlling interest. Okay, for the consolidation entries, first yung acquisition date. Just a recap of what we've discussed before sa consolidation as of acquisition date. So, syempre pag nag-acquire ka ng subsidiary, ang entry mo debit investment in subsidiary, credit, cash, or other accounts in the books of the parent company. And then for your consolidation entry, debit goodwill, debit the shareholders equity of subsidiary, debit or credit the net asset fair value adjustments, and then credit investment in subsidiary, credit NCI. Isa-isahin natin. Okay? For the investment in subsidiary account, noticeably makikita mo yung setup niya nasa libro ni parent, pero pagdating sa console, ine-eliminate mo siya. So, dapat yung balances ni investment in subsidiary will only appear in the parent or the separate financial statements, and it will be eliminated or will become zero pagdating mo sa consolidated financial statements. Next, na gusto kong i-point out is that the goodwill and the non-controlling interest accounts will only appear in the consolidation entry. So, hindi mo siya makikita yung balances niya sa parent or subsidiary books. Makikita mo lang siya sa consolidated financial statements. Next, finally, the shareholders' equity subsidiary accounts. The shareholders' equity accounts of the subsidiary. So, ito, yung equity ni subsidiary, ine-eliminate mo siya pagdating mo sa consolidation. Why? Para ang matira mo doon as of acquisition date will just be the equity of the parent company. So, ano yung mga kasamang ine-eliminate mo dyan, yung dinidebit mo? That will be debit capital stock, peak retained earnings, treasury, equity reserves if any. So, lahat ng equity ni subsidiary. Then, the net asset fair value adjustments ni subsidiary. Remember na ang nire-record natin pagdating sa consolidation is the fair value of the net assets acquired, diba? Pero pagdating sa libro ni subsidiary, wala kang gagalawin doon, recorded pa din siya at the book value ni subsidiary. So, to adjust it, to prepare you for the consolidation, dapat yung difference ng fair value versus the book value ng net assets na subsidiary as of acquisition date, i-record mo as consolidation entry. So, if the fair value is higher than book value, that will be debit. So, kung ano-anong accounts yun, i-enumerate mo, it can be inventory, PPE, investment property, and so on. So, credit if the fair value is lower than your book value. Okay, next. For the subsequent, kasi kanina in-account natin yung as of acquisition date doon sa first line. Dito sa second line, subsequent to acquisition date. And your assumption is, halimbawa, nag-adjust ka ng inventory. The inventory fair value of subsidiary as of acquisition date is higher than the book value. Kunwari, this is the scenario, no? So, mas mataas yung recorded mo sa console. But remember, kapag nabenta na yung subsequently yung inventory na yun, nabenta na yun, ang ni-record lang ni subsidiary na cost of sales mo doon, yung book value niya. Diba? So, the difference, the fair value adjustments, naiwan siya sa console books. So, for you to adjust, dapat masara mo din yung inventory balance na ni-record mo sa consolidation entry. So, whatever that amount is full amount, dapat i-expense mo din siya sa cost of sales. So, if your fair value is higher than book value, then your cost of sales is understated, dagdagan mo siya. So, your entry will be debit cost of sales, para madagdagan yung cost of sales mo. Credit the inventory para masara yung in-entry mo sa taas na net asset fair value adjustment. So, kapag lower naman yung fair value kaysa book value, baliktad lang yung entry mo. That will be the same. Then next, what if subsequent fair value adjustment for depreciable assets. So, example, halimbawa, PPE mo, your fair value ng PPE mo as of acquisition date ni subsidiary is higher than your book value. So, dapat yung na-expense kasi na depreciation sa libro ni subsidiary, mas maliit, 'di ba? Kasi ang depreciation niya based on book value. Pero dapat i-adjust mo siya sa conso. So the fair value adjustment should be depreciated over the remaining useful life. So i-count mo yung remaining useful life ng depreciable assets mo from the acquisition date up to its end of its useful life. So i-amortize mo siya doon. Okay. So, of course, entry for additional depreciation will be debit depreciation expense and credit accumulated depreciation. Pag baliktad naman, book value is higher than fair value. So, mas maliit si fair value. So, yung na-expense naman na depreciation sa libro ni subsidiary, mas malaki. Bawasan mo naman siya pagdating mo ng conso. So, debit accumulated depreciation, credit depreciation expense. Yun naman yung conso entry mo. Next, intercompany dividends. And we'll discuss ngayon muna will be the cash dividends. So, pag nag-declare sa subsidiary ng dividends, yung normal na entry mo naman, which is debit the retained earnings, credit cash, if that is cash dividends. Pagdating mo kay parent, ang entry niya under the cost method. Kasi 'di ba dalawa, remember, under the parent, you can account for your investment in subsidiary accounts under two methods, either cost or equity method. So, if cost method ka, ang entry mo kapag makaka-receive ka ng dividend ay debit cash, credit dividend income. So, pagdating sa ganyan, ma-eliminate mo lang dapat yung entrada ng dalawa. So, sa consolidation entry mo, yung dividend income na kinredit ni parent mo, i-debit mo para ma-zero siya. Yung retained earnings na dinebit naman ni subsidiary, i-credit mo naman sa conso para ma-zero din siya yung effect niya. Pero, possibly magka-difference yan if you are not 100% owned si subsidiary. So, the difference will be the dividends received by the non-controlling interest. So, that will be debit NCI balance sheet. And then, for your parent, equity method, kapag equity method, instead of the credit dividend income, ang kinikredit mo, di ba, nag-equitize ka. So, ang kinikredit mo dyan will be the investment in subsidiary account. Palitan mo lang ng investment in subsidiary account yung dividend income mo doon. So, yun. Your consolidation entry will be just bringing as if walang transaction na nangyari na magkaibang kumpanya sila. You'll treat them as if isang company sila. So, that's the purpose of your consolidation entry. Then, impairment of goodwill. Kapag again, the goodwill is only recorded as conso entry, diba? So, wala siya sa parent, wala siya sa subsidiary. So, pag nag-impair ka ng goodwill, wala din si parent or subsidiary. Lalabas lang din siya as consolidation entry. And your entry will just be debit for the impairment loss and credit for your goodwill, for the impaired portion. Pero, okay, iba kasi siya. Check mo muna, paano mo ba ni-record si goodwill nung date of acquisition? Is the NCI recorded at fair value or at its proportionate share? Full goodwill ba siya or partial goodwill? Kasi kapag full goodwill, dapat ang may share dun sa impairment loss si parent sa kasi NCI kasi silang dalawa yung may-ari ng goodwill. Pero kapag partial goodwill naman, dapat yung goodwill attributable lang kay parent yung i-recognize mo at conso, walang share si NCI. In short, kung sino yung may-ari ng goodwill, siya din yung mag-share sa impairment loss. For the problem, we'll have a separate discussion of this. Pakita ko kung paano siya full goodwill and partial goodwill later on. Okay, let's compute muna the consolidated net income. Paano ba natin kinocompute yung consolidated net income? So that will be the parent plus subsidiary plus or minus your elimination or consolidation entries to come up with your consolidated net income. So wala ka namang issue pagdating sa kay parent saka subsidiary kasi meron naman silang mini-maintain na tig-isang libro. Pero ang problema mo yung eliminations. You have to identify intercompany transactions and all other needed elimination. So, ano-ano ba yon? For example, your gain on bargain purchase, idagdag mo siya sa net income. Kasi, di ba, si gain on bargain purchase is only recorded at consolidation entry. Ano pa? Yung inventory mo saka cost of sales adjustments kanina. Diba sa inventory, nag-entry ka doon ng debit cost of sales, credit inventory. So, yung debit cost of sales mo, it affected net income. So, adjust mo siya doon. Ano pa, depreciation adjustment. Di ba possibly may additional or reduction in depreciation ka. So, pag additional, so meron kang debit depreciation expense. So, yung debit depreciation expense mo, it also affected the net income. And then, dividend income under the cost method. Sa cost method kasi, si parent, in-income niya yung na-receive niyang dividends from subsidiary. Tanggalin mo yun. Kasi, di ba, they are viewed as one company lang. So, bakit ka mag-i-income sa sarili mo? And then, impairment loss on goodwill. Kasi, again, goodwill is just recognized under consolidation, as your consolidation entry. So, the impairment will also be, papasok lang din siya sa eliminations or consolidation entry. Okay. How to present naman for the consolidated shareholders equity. Ito kasi yung unique pagdating sa consolidated financial statements. Meron kang dalawang portion ng shareholders equity mo. The controlling interest and the non-controlling interest. For the controlling interest or what we call the equity attributable to the parent company, you have your capital stock and APIC ni parent lang. Kasi di ba in-eliminate mo si subsidiary. So, kay parent lang to. The treasury stock, kung meron ni parent lang din to ulit. Equity reserves ni parent muna. And then your consolidated retained earnings, which is attributable to parent pa din ito. Which is computed as the retained earnings as of beginning of the period. If this is the first year of consolidation, this will be the retained earnings ni parent company, plus the consolidated net income attributable to the parent company, which we computed earlier. Diba? The consolidated net income attributable to the parent company minus the dividends declared by parent. So, in short, lahat to kay parent na transactions lang. Kasi si non-controlling interest, meron siyang sariling portion. It's separately presented within the shareholders' equity. So, paano siya kino-compute? Your NCI beginning, which is if this is your first year of consolidation, ito yung kinompute mong balance ng NCI mo, either at fair value or proportionate share. Plus your share of non-controlling interest in your consolidated net income minus the dividends received by the non-controlling interest. Let's have a problem, okay? Consolidated problem. How to compute for the consolidated net income. So, this is the problem. May mga given siya, pero ang hinahanap mo requirements, first, the consolidated net income attributable to parent, the consolidated net income attributable to the non-controlling interest, the consolidated retained earnings, and then how much is your non-controlling interest as of end of the year, which is December 31, 2019. In this example, let's solve. Solution. So, first muna, compute natin si consolidated net income attributable to parent and NCI. Pero bago mo yan ma-compute, check mo muna yung goodwill kasi baka meron kang gain on bargain purchase. And of course, gain on bargain purchase affects your consolidated net income, diba? So, compute natin. Consideration transferred. Consideration transferred for the 80% interest acquired, 316,000 given siya. And then your NCI is measured, ang assumption dito sa problem na to, your NCI is measured at fair value. And that will be computed as based dun sa consideration transferred, 316,000, divided by the percent of the acquired interest ni acquirer, 80%, times the percentage ni NCI, which is 20%. Your NCI at fair value is 79,000. Then your fair value of net assets acquired computed as, nag-start ako sa book value of net assets acquired kasi given siya. Paano yun kinompute? Yung common stock, 40,000, APIC, 120,000, and then retained earnings, 190,000. Your total book value of net assets acquired is 350,000. And then you have your fair value adjustments as follows. 5,000 for inventory and 15,000 for the building. So your fair value of net assets acquired is computed as 370,000. Goodwill ka pa din naman, 25,000. Okay, good. Then, to compute for again, ang kinocompute natin is the consolidated net income attributable to parent and non-controlling interest. So, paano siya kinocompute? Net income ni parent, 100,000 given. Net income ni subsidiary, 50,000 given din siya. Your inventory adjustment. Ito yung sinasabi ko. Your fair value is higher than the book value. Ang sabi ni problem as of acquisition date. So, ibig sabihin, yung ni-record na cost of sales ni subsidiary nung subsequently na benta niya within the year yung inventory, kulang. Kulang yung cost of sales. So, if your cost of sales is kulang, your net income is sobra. Sobra yung net income mo, bawasan mo. That's why pa-minus. Your building daw, your fair value is higher than book value. Diba? So, ibig sabihin, your fair value is higher than book value. Mas maliit yung book value. And nag-base ng depreciation si subsidiary based on the book value. So, kulang yung depreciation niya, di ba? Your depreciation expenses, kulang. Your net income is sobra. So, bawasan mo ulit, kaya pa negative siya. That will be the 1 year, 15,000, the total fair value adjustment. Over 8 years, the remaining useful life, 1,875. Again, take note of the dates. Kasi halimbawa, ito ay mid of the year. Kapag halimbawa July 1, 2019 yan, tapos ang pinapakompute is the consolidated net income for 2019. So, dapat 6 months lang yung i-depreciate mo dito. I-prorate mo siya. Okay. Nagkataon dito sa problem 1 year yan. Pero kung less than a year, itong kinocompute mong period na ito, yung depreciation mo, dapat i-prorate mo siya. Pero pagdating mo sa inventory, hindi mo yan pinoprorate. Ipoprorate mo siya sa kung ilan yung nabenta. Ang sabi naman yung inventory mo nabenta lahat. Okay, let's continue. Sabi mo, your goodwill is any remaining excess is full goodwill with an impairment for 2019 amounting to 3,000. Full goodwill ka. Again, kapag full goodwill, ang may share ng impairment loss, si parent sa kasi NCI. So, ilagay mo siya, yung full amount niya, ilagay mo siya under column ni subsidiary. Para later on, kasi i-allocate natin yung net income ni subsidiary to parent and NCI. So, pag nilagay mo siya sa column ni subsidiary, automatic ma-share rin si parent sa kasi NCI. Kaya doon mo siya ilagay kapag full goodwill method ka. Okay? Then your dividends ni parent. Kasi si parent, nag-record siya ng dividend income by how much? The 10,000 dividends declared by subsidiary times 80% na owned ni parent. So, meron siyang dividend income na pumasok dun sa net income mo. So, ibawas mo siya. 8,000. Then, you have 92,000 and 40,000, 125. How to compute for the consolidated net income? I-add mo lang silang dalawa. The net income dun sa column ni parent, saka net income sa column ng subsidiary. That will be 132,125. Then, your consolidated net income attributable to parent is, yung sa column ni parent, lahat yan pang kay parent. So, kunin mo yung 92,000. Pero sa column ni subsidiary, Ang kay parent lang dyan, 80%. So, yung subsidiary, times mo siya sa 80%. Tapos, i-add mo yung buong 100% kay parent. Your consolidated net income attributable to parent is 124,100. For the net income share of the non-controlling interest, you have, kunin mo yung column ni subsidiary, 40,125 times percent ni NCI. That will be 88,025. Okay, that's simple. Next, how to compute for the consolidated retained earnings. Again, paano natin yan kino-compute? Retained earnings beginning, which is retained earnings ni parent if that is the first year of consolidation. So, retained earnings ni parent plus the consolidated net income attributable to parent minus the dividends declared by parent. Ganun lang siya. Let's compute. NCI retained earnings beginning ni parent is 200,000. Given siya. Ayan o. Parent company's common stock amounted to 500,000 and retained earnings of 200,000. Given siya. Next, the consolidated net income attributable to parent, yung kinompute natin kanina na 124,100. Yun lang siya. Less the dividends declared by parent na given ulit. Sabi niya, parents reported net income amounted to 100,000. Dividends of 20,000. So, yun. Dividends, 20,000. Your consolidated retained earnings as of end of the period is 304,100. Next, how to compute for the non-controlling end. This is computed as NCI as of date of acquisition, which is at fair value. Yun yung assumption natin kanina. NCI at fair value as of acquisition date, plus the NCI share in the net income, in the consolidated net income, minus the dividends received by the non-controlling interest. So, paano siya? The NCI at fair value, 316,000 over 80% times 20%, 79,000. NCI net income, yung kinompute din natin kanina, 8,025. Then your NCI dividends is 10,000 na dineclare ni subsidiary times the percent ni NCI. Ang na-receive na dividends ni NCI ay 2,000. So your NCI ending is just simply 85,025. That's it. Problem 2. Next problem na tayo. Ang assumption mo naman dito sa problem 2, kanina kasi 'di ba ang assumption natin, NCI is measured at fair value. What if NCI is measured at proportionate share, meaning partial goodwill? Tapos nagkaroon ka ng goodwill impairment. Ano yung mababago lang sa computation mo? Yung mga naka-maroon, yun yung mababago sa computation mo. Okay, your consolidated net income is still computed as net income, inventory adjustment, building, the depreciation adjustment. Then ito, yung impairment mo sa partial goodwill. Kasi 'di ba kapag proportionate share, ang may-ari lang ng goodwill si parent lang. Hindi mo ni-recognize yung share ni NCI sa goodwill. So since si parent lang, dapat sa kanya lang din mapunta lahat ng impairment ng goodwill. Tapos ang sabi, 3,000 daw yung full goodwill na impairment. So kapag partial goodwill yan, that will be 3,000 times 80%. So, 2,400. Okay, so your dividend same pa din. Pero nagbago yung amount sa column ni parent sa column ni subsidiary. So, let's compute your consolidated net income. Magbabago din siya. Kasi, hindi masasama sa consolidated net income mo yung impairment losses ni NCI. Kasi wala namang ganun. Wala naman siyang goodwill from the start. So, wala din siya dapat impairment, diba? So, ang difference niyan nung consolidated net income na kinompute natin sa partial goodwill impairment versus the full goodwill impairment. Ang difference niyan will be the 20% ng impairment na 3,000, which is 600. So, yun lang dapat yung difference niya. Pagdating sa attributable to parent, pareho pa din. Kasi 2/4 pa din naman yung share niya sa impairment. Kapag naman NCI net income, wala siyang share sa impairment. So, yung 600 na share niya ng impairment, wala. So, kita mo yung 600 yung difference din kay NCI. Yun lang siya. That's it. So if you have questions, just let me know. Thank you.